Good morning and a belated Happy New Year to you. It's Monday the 17th of January and welcome to Atlantic Capital Markets' first roundup of the year for the coming week's economic highlights to keep an eye out for. As always, we'll start with a quick summary of the key macro data points coming up this week in the world's markets, and we'll then take a look in more detail at some of the bigger stories straight afterwards. So let's get straight to it. So let's take a look at the economic numbers being issued this week, and the key numbers start today with news from China with their latest retail sales figures and an update on their GDP, something we'll discuss in more detail in a moment. We'll also be discussing in a moment Tuesday's release of the latest UK unemployment figures. Also on Tuesday we can look forward to the latest interest rate decision over in Japan, the ZEW economic sentiment figures and Westpac Australian consumer confidence numbers. Wednesday is another key day in UK statistics when we'll hear the latest inflation numbers, and that's something we'll also discuss in more depth in a moment. This will also be in the context of hearing the same figures from both Germany and Canada on Wednesday. And to put those in context, Thursday also brings us the inflation figures from the Eurozone, the US and Japan. And we'll also hear the employment statistic data in Australia. And finally, on Friday, to round off a complete set of UK figures, we'll also be hearing the latest UK retail sales numbers, covering the festive period. And to wrap up the numbers for the week, we'll also hear the GfK consumer confidence numbers, and the same for the Eurozone. And the companies reporting this week are as follows. On Monday, we'll hear from Ashmore Group and Rio Tinto. On Tuesday, we'll hear from BHP, Hayes, and over in the US, Goldman Sachs, and we'll discuss them in more detail in a moment. On Wednesday, we'll hear from Antofagasta, Burberry Group, Wetherspoons, and in the US, Bank of America, Alcoa, Morgan Stanley, and United Airlines. Thursday brings us Associated British Foods, and we'll discuss them in more detail shortly. Entain, Deliveroo, Ibstock, and finally, over in the US, Netflix, and again we'll take a look at them in more detail in a moment. And finally on Friday, we'll hear from Close Brothers and Schlumberger. Well, it appears that Boris Johnson is standing on pretty shaky ground. So far, the Prime Minister has survived the Partygate scandal, buying time with an inquiry. Ministers continue to support Boris Johnson, however, there is growing discontent amongst backbenchers who could look to oust the PM sooner rather than later. Meanwhile, on the international scene, there are growing signs that Russia could be preparing to invade Ukraine after talks this week. Russia held talks with the US, NATO and OSEC this week, all of which ended in an impasse, raising the stakes of an invasion. US earnings will also step up a gear with more US banks and Netflix due to report in the course of the following days. So, let's take a look at the important stories of the week in more detail. Monday brings us the latest GDP figures from China. The Chinese economy is expected to have expanded 3.3% in Q4, which would mark its weakest economic growth in over a year, amidst the disruptions from the global health issue and amidst the deepening cost of property market slumps. The slowing of growth in the economy is fueling expectations of more monetary stimulus from the PBOC, as policymakers attempt to stabilise the economy. The credit crunch in China's property market shows few signs of slowing. Meanwhile, consumer spending growth has not returned to pre-pandemic levels, as repeated infectious outbreaks dent household sentiment. So do keep an eye on the Australian dollar, which is of course considered a China proxy. Tuesday starts a week of key figures in the UK, starting with the latest unemployment figures. According to the Office of National Statistics, the rate of unemployment in the UK fell to 4.2% in the 3 months to the end of October, down from 4.3% in September, marking its lowest level in 15 months. Meanwhile, the number of employees on payrolls increased by 257,000 to 29.4 million, whilst the number of vacancies increased to 1.22 million. Wage growth eased to 4.7%, down from 6%. However, given the number of vacancies, wage growth is unlikely to slow further, with firms needing to increase pay packages in order to attract and retain workers. The unemployment rate is expected to fall again in the 3 months to November to 4.1%, further calming concerns at the BOE over the impact of the end of the furlough scheme on that labour market. So do keep an eye on GBP and the FTSE. We'll also hear Q4 earnings from Goldman Sachs. Now, expectations are for earnings to fall 4.8% year-on-year to $11.50 a share. Revenue is expected to rise 2.6% to $12.04. Trading revenue has been a strong source of revenue across the pandemic thanks to high market volatility. However, this induced volatility is returning to normal levels. As a result, Goldman's trading revenue is expected to be $4.5 billion, which is still up 20% from Q4 2019, but down 45% from Q1 2021. Meanwhile, deal-making shows few signs of slowing, which is expected to once again be a strong source of revenue for GS. Generally speaking, GS has had a better handle on costs than its peers thanks to the fact that it's not a consumer bank. Even so, the share price has underperformed bank peers this year, trading down 3% amidst concerns over the bank's ability to sustain last year's impressive run. Wednesday brings us the latest inflation update for the UK. November's consumer price index surprised to the upside, soaring to 5.1%, up from 4.2% in October. The Bank of England hiked interest rates to 0.25% the following day, whilst also revising its inflation forecast higher to a peak of 6% in April 2022, which is of course well above the BOE's 2% target. Whilst inflation in the US has already topped 7%, the UK isn't expected to see consumer prices rise quite as much thanks to discounted clothes at Christmas and slightly softer energy prices. A further increase in CPI could add pressure to the Bank of England to hike those rates again in February. So, of course, do keep an eye on the pound and the FTSE. Primark owner Associated British Foods is due to report on Thursday. The group showed resilience through the pandemic, coming out the other side relatively unharmed. Impressive stock management, in addition to a strong performance in the grocery side of the business, have helped the firm weather the storm. While shops have reopened, conditions remain tough for retailers. The grocery area is suffering from supply chain bottlenecks and rising costs, which were highlighted in December and are likely to have worsened since. So could price hikes be on the cards to combat rising costs? Primark could suffer similar issues. Given the group's price-sensitive customer base, surging inflation could see Primark customers start to rein in spending. The streaming giant Netflix saw subscriber growth slow in 2021 as virus restrictions eased and people left their homes to get on with their lives. In the first 3 quarters of 2021, Netflix subscriber numbers grew by 9.9 million. However, this was significantly down from the 15.8 million new subscribers in Q1 2020. Expectations are for new subscribers to reach 8.5 million in Q4 thanks to content being pushed to later in the year and thanks to Squid Games. However, rising costs from new content could see operating margins drop to 6.5%, down from 25.3% recorded in the first 9 months of 2021. Heading towards earnings, Netflix share price has come under pressure over the last few weeks, along with other high-growth tech stocks, amidst the prospect of higher interest rates in the US. Competition remains hot, of course, from Disney+, Apple TV and Amazon. So content will be very much in focus in order to stay ahead of the game. The prospects for user growth remain strong with the addition of video game streaming on mobiles and also the acquisition of the Roald Dahl company. Expectations are for earnings per share of 88 cents on revenue of $7.71 billion. Finally, Friday brings us the full set of key UK figures with the update on UK retail sales. Now, retail sales grew 1.1% in October, with the pace picking up again in November to 1.4%, as consumers took advantage of Black Friday sales and, of course, started their Christmas shopping early. However, the strong rate of growth is expected to have slowed in December amid surging infectious cases. Consumers stayed away from pubs, bars and restaurants in order to avoid close contact. However, supermarket food sales are expected to have had a strong festive period. Updates from the big supermarkets have actually already confirmed this. Retail sales are expected to decline, down 0.6% in December compared to November. So do keep an eye on the FTSE and of course the GB pound. So that's all the big stories in detail. Let's wrap up with a look at the dividends due this week. In the FTSE 100, we'll hear from Compass Group. And in the FTSE 250, we'll hear from Diploma and Games Workshop. So that's it for the coming week. If you're a new viewer of our regular videos, why not click on the subscribe button just to make sure you don't miss our regular market updates and, just as importantly, our special market analysis videos as soon as they're released. And you may want to check out our top 5 share tips for 2022, which has just been released. And of course, if you're interested in the markets, let me remind you about our app, which you can download from the App Store to your mobile phone, which gives you a whole host of useful functionality as an investor. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.